Have you our be devoted totally to activity-based costing, and much of it, the answers to case 2, which cover activity-based costing. So what you have on the screen now is requirement and this is part of the document which is the answers to case 2, which is posted. To compute the cost for, and see that the first column represents the activities, the sequence of a major identified to a second column. These are the costs then pulled together by activity. So this has also the results are that all the costs associated are all the costs 600 and so on. Obviously, they sum up to the total support cost of 6,000. Now, the activity cost drivers that were chosen for that machine, a number of machine hours for running machines. You quantity, the driver quantity column, the cost drivers, and those levels come from easily that the runs summation in here costs are here. The 10,000 machine hours come from the line summation for total machine hours. And now the rates by the objects the for the activities of handling production runs, the divide 6 uh, 3 run. But up hours, which is 800, that gets you $42 of setup machine costs per setup hour. Support products, therefore, products the machine doesn't. So the ACDR, 20% of machine running costs. So the ACDRs are calculated. Any questions about the ACDRs? So you have to the cost assigned from here. Pens is the number of the units are your cost pens, plans, and have 4 products. Blue pens. The 10,000 units pens here, product here identified and the types of pens are identified by the color they're in. Actually, the same. The only difference here, the same structure, the only difference color, the color of the ink. Oh, that's a difference. Costs for the machines are not unit oriented. In other correlated direct units, right? It's not the case. If you look at, let's go, right? It is not the case. It has 50 purple. The number of units of blue pens produced 50 times and the number of units of pens. That does not necessarily mean that the support costs for cost. So therefore, there's a difference. And the sustaining, for example, the cost of sustaining purple pens, the product purple pens per pen, per purple pen may be quite higher than the cost of sustaining blue pens per blue pen. And one of the numbers basically mission accomplished, because remember, our mission or better way, a more sophisticated way to allocate to the support. And the better way to allocate the ones in taking the allocation to the which are blue, and the allocation based on each activity, each identified activity separately. So, let's numbers. Well, let's go over some of the numbers. And handling. Remember, in this production runs that is allocated to 100, you look at the numbers below in the parentheses by asking what is the cost driver of handling production runs. And we know that the cost driver that we chose is. So then we ask what are the number of for, and the number of runs that we used for blue is production runs for blue is 70. So we use 70 runs. Per run, how much of run times $330 of cost of this particular cost of this activity to 100. Here. Let's look at machines, the cost of set of machines for black, and the cost allocated here of setting up the machines for 52. Well, again, how we get it? We go to the level of the cost driver and we say first machines back. How many did we use? 100 for the cost. The AC, we must to and black, and so on. So all the numbers are calculated by the same method. So now we get the total indirect costs assigned to all. We sum up the for blue, and we get 59,460. The cost of all the indirect performed for black, 8,402, and 8 sum to the total cost of 100,000. Bottom line in table 4 gives you the allocation to blue, black, red, and purple pens based on activity analysis, and that's really what we wanted. So basically, so the requirement now in 3 is basically a new allocation of indirect costs by product. So all you have to do is to plug the new cost sales as did earlier, material, direct labor, which costs 40% of direct labor, so you 40 the numbers here. I think the difference from previous analysis materially is the support cost of the indirect from the into the margin. Now you can compare an activity-based costing with table number 1 that was based on traditional costing of the indirect costs. And what you find is that there are dramatic differences in the gross margin and in the percentage profitability. The margins and saw that based on traditional costing, all the type of pens were profitable. Under the old analysis, in red and terms, more blue and black, red and quality. Activity difference in point. White and proper 6.8% of sales. Purple is enormous 0.8% sales. Dilemma now before management, we have a different set of cost and profitability numbers for the products. Which we go by with decisions, and we have to make decisions, very important decisions about product mix, which on the basis of what well, I think it's figure out that the activity-based costing method produces more accurate because of activity analysis. And the analysis of the activity behind indirect inputs and the indirect costs, the level of different products. For example, purple and red require considerably more setups. Smaller. It's to not only the number of setups requires more time to set things up as the one reason is out the previous actually we did that already, but if we go back to different that well, the set it was colors, so to other color more, and red and purple require the highest number of hours. Example, requirements in inputs and their costs that are behind the production here. In production runs, we saw that relative to the number of units produced, requires much more production runs than blue. Not an absolute number because we produce 50,000 blue pens and only 1,000 purple pens. Relatively speaking, the number of runs is higher because they're produced in very small batches. So we know that our first method summed up all the costs of all the activities and lump, and then allocated everything based on the direct labor hours for each pen. Don't count for all those differences. So simply because of our knowledge of what's going on, and even at this of the activities and the cost drivers, that these numbers, activity-based costing, are much better numbers. So I think that if to choose, we activity-based numbers. The next was a requirement, but we're going to use activity-based costing numbers its results to improve performance. So how we can use decisions. One important decision is a product decision. So any question, any thoughts about what are and what the options are? What the different strategic options? Imagine yourself, you are in a management meeting of Cooper's Pens, and now, and basis on this, you want to just mix. So yes. Yeah, one thing that's logical is product in very simple. Let's phase them out. Let's get rid of them. We'll increase profitability, right? It clearly is product profitable. If we phase them out, profit. Butter products are blue. Okay, that's one. Any other? Well, of course, the are profitable, but can we take that will make all profit differences between revenues and costs? Is first. You go to table 1, prices. what we see is that we purple only slightly higher, right, than 60 relative. Well, maybe we should, maybe we can. I don't know how much. And, uh, and if we can price them significantly higher, we may make them profitable. So we can calculate how much we have to price them higher, other things being equal. Consideration. Of course, it's nice to it's difficult to conceive that a company, right, they're competitive. And the question is, how high can you price before you lose much in terms of the quantity of sales by people shifting to other competitors? But the pricing issue should be investigated. Now, that's one way to make well, you mentioned the we in being reduced of red and purple, and by reducing the cost, make them more profitable. So, better way of producing. You produce very small batches because they sell in small volumes. Or maybe it's in time and then and you have to see what are the costs of high inventory. Can keep pens in inventories without the ink drying up, for example. But these are things to consider. So you could look at the operational side and how much in productivity profitable. New product, I just manufacturing them. Maybe maybe the company needs time to use the really increasing the volume. Let's strategic consideration as to overall strategy of company we want to produce. Do we want to put emphasis on cost leadership? Do we want to put an emphasis on diversification? If your costs as low as possible so that your price become one of the low advantage over your competitors by able to sell price and so leader and a class many years of the automobile industry. The early days of the automobile industry, automobiles were rare and they were considered luxury products. They were fairly expensive, produced in small batches or individuals. Revolution of Henry Ford let us, the Ford company, become a cost leader. Because I know the United States own costs too high, and the reason the prices is too high because it's too costly. It's high cost manufacturing. So let me find a way to reduce dramatically increase cost produced. Then was a revolutionary idea of mass production of cars through a to us. Most cars are produced in mass production through a at that time it wasn't obvious at all. So ideas that look obvious now, that's fine with the hindsight. The wheel looks an obvious idea now, but before the wheel was invented, right, people were just dragging things and fighting traction, and they didn't conceive of the idea that they could put wheels on things, right? So to produce, but the product also had to be very, very standard cost. So this is, as you all know, and the typical saying about this car is that you could have, as it was, didn't have and right looked like the Model T. Then that came later to the idea of mass producing houses when people started to the suburbs in order to enhance the moving to the suburbs and make cost of housing piece the town. You with identical houses. You could buy a house very was the same look cost leader, not one cost. For example, if we return to Royce versus so still part of the production of Royce is that you pay hundreds and hundreds of approach. So depends. You have to make a decision whether one possibility so but use it's going to say we are going to now in question. Maybe there are companies that are interested very that are interested elegant the higher question is, do you want to carry to diversify, and do you want to have cost leaders and more full line on cost? You want to concentrate only on quality. Fountain pens that you probably saw them in exclusive stores are not interested in cost leadership. But they're pens for a variety of reasons, known and unknown. So again, the issue is we can't answer those questions on this about the preferences of the customers. What are the company? We don't. It's a very brief case. We don't have. It's important for us in a cost management. Make it important. We basically need decisions. Information, in this case, higher accuracy in cost information provided is something necessary. The other that is provided by activity us not only accurate information, where the problems are and where we can improve. We move to 6. Anything, any other comments or? Six, if ABC result changes in that happen for estimating the value added of the ABC relative ABC well, the idea established the fact that going to activity-based costing is very likely to increase accuracy in many cases. And many activity-based costing. Well, there companies that are doing traditional cost are expensive. The answer is, I heard the word so free in terms of improving decisions and at its cost. In other words, it can be quite costly in terms of implement the system. Now, it don't want more accuracy for the sake of accuracy. Want more effective. Let's say if that enhances. So in what many consider before they 8 and benefits traditional costing to ABC. Incremental benefits exceed the incremental costs. Of course, it's an estimation. Then there is a good reason to go to ABC. But if you have the information here, obviously it's a very difficult of so all that you're asked to do is to identify cost categories and benefit categories. Well, the increment. First of all, the high analysis. Before you know to do detailed activity analysis, sequence of using and so. Now that could be quite an undertaking because with types of activities, but complex production and many products of correct sequence in may human. The analysis can be Do the edit, see which activities add value more, which add value. That and find the sequence, the alternative sequence of important activities, redundant, and then of pooling the relevant activity cost into their respective activity. So it's not trivial to try to all, because the costs are not reported necessarily that way. So you have to look at the costs that are classified in that you can relate activity that you identify and decide which costs belong to which activity. Costly effort. The cost selecting the most appropriate cost drivers. You have to put thought and analysis into what is the most appropriate cost driver for each activity. So you have to gain better understanding of the relationship between costs and activities. And it's not only which cost driver is appropriate, whether it's feasible. And on top of that, when you've gone through all this effort and incurred the cost of doing so, you also have to continuously update those analyses, all those figures and all those analyses, because technology is changing, operations are changing, and as the activities are changing, and as things change, you have and keep abreast of what is happening. So actually, what you have to do is to estimate all these costs, which are not easy to estimate before you see, before you undertake. So the categories of benefit. Activity-based costing is the method that triggers analysis and analysis of activity sequences, which wasn't there before. That is a major benefit in and of itself, apart from increasing accuracy of cost. To get a much better understanding and get idea of how performing in terms of good. And that of activities to eliminate redundant, to reconfigure so as to increase your efficiency. So when you pull the costs together into activity categories and your cost drivers that drive the cost of those the related activities, which can improve decision making. And of course, most of the time, more updated, accurate cost information to work with to that on the basis, and you can avoid grave errors. Primitive working with. Remember in Cooper's Pin, old cost to decide. Purple and red pens because they were the most profitable, right? Your decision reduce your profitability. So you have benefits in pricing and profitability analysis. Again, value in this is very difficult, and I'm not shift ABC. Some of them he will out. It's possible to go through this before implementation. Any more? Now, this is case number 1, and it's going to be over. It will have to be the plan, and it looks like did that, and then turned, and the procedure is that if you like the feedback, I think is intact. And if do it this way, is time next. It's just issues. The idea is maybe ABC is a good method, but when it's implemented, there can be issues. There can be important issues in terms of the quality of implementation. So there's a listing here and arise, self-explanatory. If there are any questions, I'd be happy to answer them. That be basically self-explanatory. So what I would like to do now is to take a 10 minutes break and then have a short session discussing an implementation of ABC to marketing and selling. What we have done here is manufacturing, and I want to have a brief example of how activity-based costing can work in the areas of marketing and selling and customer profitability. So let's take 10 minutes break and reconvene. Thank you. See.
Yes. So number
For the ABC, right? 13 and a half. Well, that is margin, right? As a percent. As a percent. You see, it's margin as a percentage of sales. So you ask yourself, this gross margin figure, what is it of dollar sales, right?
gross margin for ABC system is different. Traditional accounting system. So the
Is back to
I don't because the
off scale work. Uh,
yeah,
but that is
sell
change if you produce units, so you still fixed level. The
but
remains it people you need, right? But you are not allowed to fire people.
yes.
So if you produce less,
Oh, yes, it said choice.
oh, yeah,
Okay.
okay.
Just, oh, just all.
Write me.
Oh,
Okay,
thank
thank
you.
you. Okay, let's reconvene, please. Okay, companies for who bulk of their costs are in marketing and sales. Do a based costing for their marketing and object customers or markets or distribution channels. Example, company who has two very big and very important customers. It's obviously a company that is selling business to business, so the customers uh, customers alpha and beta. Here on how to the cost. So they're costing in their allocation to different customers to assess customer profit be quite important. Now, at the start, it uses a primitive of allocating marketing and selling costs, and this is based on a uniform 35% rate. This is number is of the 315,000 for beta. And on the basis of costs, right, that are very close to beta. But we need to assess the profitabilities of alpha and beta and suspect that allocating at a 35% uniform rate the expenses for customers doesn't reflect reality because that these customers are very alpha is very easy customer and beta is a very difficult customer. Easy and difficult in terms of they and what they demand. Report the account manager spends a very large portion of really coming with all kinds of different sound requires technical resources. They like expedited delivery time, pay slow. All of that is on older customer from health, deal customer. Only a few places with long lead times. For and technical support. The managers of the company decided that if they want to have good profitability analysis, they do a different allocation than a traditional 35% of dollar sales. And marketing east of activity to identify activities linking. So basically, the steps that we know were undertaken to do service to customers, travel customers, providing market. Go into detail before example about the activity-based costing step by step, but it does present you and final hitting and full and data. Some dramatic differences between alpha that is easy and beta that is difficult, but until you do the numerical analysis, you don't know how big those, how significant those differences are going to be. Well, for marketing support, roughly the same volume of the product and revenues generated, beta close to 8 times than travel alpha. Technical. So order. More and costs eventually 1,100. Bottom line was customer losses of 30. 43%. Here comes the question. Okay, you believe more, of course, than the other numbers, but based on these numbers, you want to act. What do you do in terms of your policy toward your customers? Yeah. Exactly. Could I unprofitable? We don't need unprofitable customers. We'll drop them and we increase our profitability. Right? That and you, if you have a by phasing all of them out, you would have to downsize business, your operations, and that may have other effects, including effects on cost, workers, number of whom and so forth. The other strategy that you mentioned is saying, all right, I really don't want to drop beta outright, but yeah, beta is very difficult, but fact into customers, not easy life in any. And easy customers, difficult customers is a cop-out. I either customers and see reconfigure my operations, or as you beta, I can analyze and say maybe certain things I can adjust to, but other things demand and try to renegotiate the terms. Things you can tell beta I will do, or for technical support. Technical support. Distinctions need some technical support. We'll provide it, but we'll charge for it. This example, support. You could, and by those renegotiations or reconfiguration, you can try to make beta and succeed. Activity costing gives you, it gives you the basis, a much better basis in terms of costing, more accurate costing for decision support. And moreover, because there's all the, it gives you what we're based costs to cheating things otherwise. Getting to beta I in shipping orders. You just cannot come and tell me I want an order shipped yesterday. Or if you want to expedite it, again, there'll be special arrangements and a special search. You have the indications here of where you have to go and activity-based costing gives you to make to improve your customer profitability. So as long as we stay profitability, there's an interesting chart which you can use if you have profitability activity. Profitability plot this chart on the horizon customers by numbers of customers start getting your most profitable customers. 1% of all I see that gives if you in other words 1% profit you dramatically percent profit generated 3 or some profit. You go to the that generate about and also 100% of your profits. So what happens in between? You maximize your profits somewhere here at over profits around so less than 40% of your customers of your most profitable customers and you the other 6% and suggest profits because if you discontinued 60% enable the debt. So basically show they did and then section of your customers count profits. Any questions about this chart? Well, not only does it tell you what a pattern of profitability is, but since either you know you profitable customers, as you know, customers ranked that way. So on basis of this chart, you again the options are not too many, but they have to be investigated. Of course, it's tempting to say drop 60% of the customer and not business. And it's the would so much because some of your costs may be fixed. They want to. What could you do? Well, you are profitable. Maybe something is where can put all the blame on the customers, right? It's tempting to put, but maybe the problem with the way I operate to analyze and see. There's some problem with decision making. If so many customers that are unprofitable, why didn't I continue to operate? And then to make a large portion of those customers could analysis, but the quality of the figures depends very the quality allocation. If there are no further comments, we can adjourn now. But before we adjourn, the Blackboard from Monday early in the morning night. So around tomorrow be down and so you will have goes back around. Be careful. Period. Yes. Monday a little bit it. Actually, of course, why they need 4 days to do the maintenance, it looks odd, but the services so operates. They figured out that next week is, but of course they forget that there are a good number of special programs that are still running. And when you tell them that, that doesn't impress them. So we'll have to